Assalamualaikum everyone. Welcome back to another sneak peek of my course, Peaceful Profit Through Investing. My name is Dr. Miral Azam Khalil, and if you have been following me, I have been talking about my signature course, which is Peaceful Profit Through Investing. It's a 12-week course that starts in December 2023, and the course is unbelievable value, and it is extremely uh, important and foundational for people who want to learn how to day trade. So, in today's sneak peek, I speak about a very important topic which is discussed by many people online, which is, you know, uh, which I think needs to be addressed, which is simply that day trading is riskier than long-term investments, because nobody can time the market. Now, one of the things that you need to understand is that, yes, absolutely. The first thing that is a basis of my business is being extremely honest. Day trading is absolutely and more riskier than long-term trading. But here's the problem with this notion as a blanket statement. There are many people that I know, many people that you can search for yourself, independent of myself, who are making a living through day trading. As Muslims, we cannot pursue a certain avenues in um, the stock market and trading, like options and other things. But we can. There is no harm in buying something at a cheaper price and selling it at a higher price, which is called the simple day trading. Now, the risk is a factor. So, today I'm going to tell you the three things that are going to help you control your emotions. And also, if you are aware of these three things, you are going to be a much more successful investor. Obviously, everything takes time and practice, and that's why my 12-week course we handhold. Hand holding is extremely important for beginning investors, because no matter what I tell you in theory, if I do not do a practical example of that, if I am not with you when you're practically trading, in my personal experience, it does not work well for most people. So, let's begin with the number one thing that I have developed, and it is used by everyone. This is not a novel concept, but it's something called stop loss. When you buy a certain security or a stock or a share, these are interchangeable terms. When you buy a certain stock at a certain price, there is an option inside your trading platform, which is simply any software you are using to trade. It could be Robinhood, Fidelity, Charles Schwab. The reason why I'm explaining this is because people get hung up on if this is available, if this is a special feature in Fidelity versus Vanguard. No, this is available all across the platforms, and I just feel that transparency goes a long way, and I want you guys to be successful. I want you guys to make money. So we're not going to hang up on which platform, because this is universal everywhere. There's a feature called stop loss. If you are able to buy a stock at whatever price, you can put a stop loss on it, which simply means that if the stock was bought at $136 per share, I can put a stop loss at 120 or 125 or even 130, which simply means that if the stock price were to go down to 130, the software is automatically going to sell your share, which means you're only going to lose a couple of dollars. If you've bought one share, you're going to lose a couple, very less amount of dollars, but that you're going to determine what is your risk tolerance. And when that's we're going to talk about this tomorrow, but in short, when you determine that this is the amount of loss I can take. But this is an art. You cannot just simply put a stop loss at a cent less than what you bought, because naturally the stock prices vary. So it could go down a little bit, it can go up a little bit. We put a stop loss at a point where we think that there is no return for this, or you believe that there is no return for the stock. You don't want to wait, and you do not want to go below that price. That is your maximum loss, maximum risk you want to take. So that is number one. Now, the number two thing I mentioned is knowing the yearly price of the stock. So if you go into any stock, you can see what was the yearly high and what is the yearly low. That just helps you understand the variability in the stock price. That helps you determine what stop loss you're going to put. So for example, um, randomly, if you look at the stock for Adobe, it went down to I think 200 something dollars, and then it came up to, this is within this year, and then it came up to, it's over $600 right now. Adobe is extremely well known, well established company, and so it has made me a lot of money this year. But I exactly knew when to put the money in and when to put it out. So you need to determine your stop loss by looking at the price of the stock. You need to know what is the variation of the stock, and that is you when you will know that, hey, I need to make money quickly, so I need to put my stop loss at a smaller price point. And then I don't, or if you want to make, if you're certain that the stock is going to do well, you can put a stop loss at a higher price, because you can say, if even if the stock price goes really down, I am still able to recover the money. An example of this is, like I gave an example before, there was a client of mine who bought the Netflix stock, I think a couple of months ago, when the earnings came out, and the stock fell. It fell $100. She was thousands of dollars in loss, and she had bought the stock against my advice. But here's the thing: she's a veteran investor at this point. She has worked with me for 2+ years, and so she was as she I told her, and she was confident that the stock is going to rise up to the point of, she bought it for, I think she bought it for 460 something, and the stock price fell to 380 or 370s. It was such a huge variation. But because she knew that this company is doing really well, she knew about the strike, and she works with me, so she knows that I have an investment in it as well. She's able to recover money, and she's now on track to make more money. But this is an example of me telling you that she did not put a stop loss. She did not want to sell it. She knew that the downfall was temporary. And so this is another reason why you need to know that there's no, while you're being careful when you're a beginner investor, sometimes when you work with somebody like me who's doing this all the time, and you develop the confidence, inshallah, there are times when the stock might drop a lot, but you're still confident because you know the ebb and flow of the market, you know the variation of the price of the stock, and so you're fine. So this is number two. The first one was the stop loss. The second one was knowing the price of the variation of price of that stock within the past 6 months. All right. And number three, there is a rule in investing which is extremely important. This is something that Warren Buffett talks about a lot. This is something that I can swear by. So, Warren Buffett, and I follow this advice to the T. That's why I'm giving it to you. وَتَوَاسَوْا بِالْحَقِّ وَتَوَاسَوْا بِالصَّبْرِ. I'm giving you something that is absolutely true to me. Okay. Um, and I have applied this. So he said that you do not sell a stock when people are panic selling, and we don't buy a stock when people are greedily buying. This is the cardinal rule that you have to follow when you are investing in the stock market. So, like I said, people are unaware of how the stock market works. This is exactly why, if there was somebody who was beside that woman who took thousands of dollars and loss in Netflix, and now she's fine within a few weeks, is because she knew exactly what to look for. She knew to look for the price range. She knew the market dip. She knew that had already taught them in class, that I have for them in my private Facebook group, that there's no need to worry. There's a strike. There was a strike going on in Hollywood. um, Netflix, the earnings came out really well. The same is the case with NVDA. The earnings came out really well, but the stock price dipped. Now, another reason why the stock price dipped, just for you, so you guys know, is that when the earnings come out, people who are short term trading, who are day traders like me and you, pull money out because we want our profit. And when you're pulling money out, the stock prices fall. Why does the stock price fall? Is because people are selling. Either they're scared, that's when we do not sell. And either because they don't know what they're doing, probably they're selling out of panic, or they're selling like me, they're selling purposefully, mindfully, because they've made money and now they want to get themselves paid. That is something that is extremely, extremely normal. So these are the three things. These are extremely important facts. These are the things that prevent you from, it minimizes and manages your risk and also helps you be profitable. It also manages, you know for beginners, it manages their anxiety, because it's not like, when people say, and I'm smiling because I used to be the same way. Because my husband used to be like, oh my god, you invested X amount of money in this stock, what if it goes to zero? I mean, and I used to be scared of it. It's a valid concern, but think about it. Can Microsoft go to zero? That means they are losing hundreds and thousands of jobs. uh, the company is closed, it's bankrupt. It's a huge, huge thing to think about it. These companies are not just, uh, like I said, I think 2 classes ago, that it's extremely important to choose a company that has a solid financial background. So, when you think about it, it's pretty impossible for a company that strong to just go bankrupt because I have invested in it. You know what I mean? Because everybody thinks that, oh, now that I have invested, this company might go bankrupt. But this is not how it is. The S&P 500, the top 500 companies that are trading on the stock market, they need to be valued at $1 billion something above before they can even offer their shares to you. So it's not the SEC, which is the Securities Exchange Commission, which has oversight over the New York Stock Exchange and the stock market, has a very rigid, has a very you know thorough way to investigate these companies before they come on the stock market. And the top 500 companies, they are trillions of dollars in valuation, guys. So please take heart. It's a huge economy. These people are making a lot of money. You are probably using this software, so why not be a shareholder in this? And I can help you. So I am going to see you tomorrow, inshallah, for day 4. I think that is the most important part of it, which is managing your emotions. Um, I will see you tomorrow, inshallah. I hope this was helpful. These are the 3 things that you look at, but there are more factors that, of course, in the 12 weeks of our classes, we are going to go step by step. So by the end of it, when I am holding your hands, you are going to be smiling. You're going to be as confident as my student who, invested in Netflix and went through the temporary ebb and peak, and now she's happy because she's going to be making money this week, inshallah. So I will see you guys next time. uh, if you have any questions, you can always put in the chat. I will reply to them. But till tomorrow, assalamu alaikum.